How do you pick up insider trading?
We do use computer algorithms, and we do catch people.
What do you think is the biggest investment mistake?
I'll give you a couple. They need to diversify, need to keep costs low, and they need to not panic.
The SEC pays government salaries, which are, let's say, modest, to say the least.
I think our people have the respect of Wall Street.
Well, they are respected, and if anybody's watching this in the SEC is looking at anything I might be filing, yes, they're very good, they're terrific people. I was trying to get them a raise.
Would you fix your tie, please?
Well, people wouldn't recognize me if my tie was fixed, but okay. Just leave it this way. All right. I don't consider myself a journalist, and nobody else would consider myself a journalist. I began to take on the life of being an interviewer, even though I have a day job running a private equity firm. How do you define leadership?
What is it that makes somebody tick? Let's talk about the SEC and the job of being the chairman of the SEC. You were a lawyer in private practice. What is the biggest change in your life now that you're doing this?
Well, I think the biggest change is that my client is different, and my client is the American investor. And that is a change from having a single client to having a group of clients.
But it can't be that stressful job. I see you have no gray hair. So is that genetic or just good fortune, or job is not that stressful?
It's good makeup.
Okay. When people say to you, I want to invest in security A or security B, you say, well, that's not something I can advise you on. I can just give you general principles. Is that what you say?
That's exactly what I say.
Okay, well, maybe I should be chairman of the SEC. Okay. You have said that you think that smaller investors, maybe through their 401ks or IRAs, should be able to invest in illiquid securities. Is there any progress towards that?
We are studying it. Our private investment market has grown substantially in the last 20 years. You know this. In fact, last year, more capital was raised in the private markets than in the public markets. And our retail investors, people who are not qualified investors, aren't having access to those investment opportunities. And over some periods of time, those investment opportunities perform better than the public capital markets. So we're looking at this, and we want to make sure that retail is not left behind.
Now, in the investment world, for the last 4 or 5 years or so, people have been worried that another recession is going to come. Nobody is really predicting a recession tomorrow that I'm aware of, but you recently made a speech in which you said leveraged loans are relatively high and reminded you of 2008. What is your concern about leveraged loan market?
Well, let me clarify, because I'm not saying that the leveraged loan market today reminds me of 2008. What I said about 2008 was there were mismatches in expectations and economic realities. In 2008, we thought that not all mortgages would move in the same direction. They did. We thought that a guarantee fee at the GSEs of 25 basis points was right for all mortgages. It wasn't. Then you look, in my job, you look around and you say, where are expectations and realities out of whack? And one place that they may be is that leverage loans don't settle like bonds. It takes a while to transfer a leverage loan. If you wanted to sell me a bond, we would settle 3 days later. If you want to sell me a leverage loan, it might settle 15 days later, it might settle 30 days later. If people think that those loans are as liquid as bonds, they may be wrong. So you don't want a high concentration of those leverage loans in a liquidity product like a mutual fund. That's what I was saying.
Is there anything else you're worried about right now?
I've been worried about Brexit, a hard Brexit. A hard Brexit, I think, would have significant economic effects. We've asked our registrants, our public companies, to describe what a Brexit or a hard Brexit would do to their operations, and there'll be some significant changes in people's operations.
Now, you've also written your word about cyber risk.
We still have a ways to go on preparation. There are a number of what I would say single points of failure in our information economy that we need to make sure are resilient. The ones we worry about are exchanges, clearinghouses, large banks. If there's a cyber problem, are they able to get up and running quickly? And that we need to move to where we're more comfortable that that's happening.
In 1997, roughly 20 years ago or so, there were about I think, twice as many companies that were public as there are today. I think maybe 7,200 then and maybe something like half that now. So is that because the SEC is too tough on companies? They don't want to go public because of all the constraints that you impose on them? Or is it because of other factors in the market?
So I think that there are a number of factors. One of them is regulation. Another one is the emergence of private investment opportunities, private equity, credit for private equity. Another is consolidation. But each of those three has contributed to that reduction. What I don't like is that companies are not choosing to go public early in their life cycle. We're seeing companies with high valuations going public, but not nearly as many in the, what I'll say, 500 million to 2 billion.
Why do you care? Why do you not like that if they wait to the much bigger in valuation?
Because I want our retail investors to get a chance to invest in those companies when they're growing. It's great to invest in a $20 billion company. It's really nice to invest in that $20 billion company when it was $2 billion 2 years ago.
Many people are confused about one thing about the SEC, and I'd say non-professionals. They think that the SEC says this is a good investment, not a good investment. But your mission has really been to just make sure people are adequately getting information for full disclosure. Is that fair?
That's correct. Two principal things. Transparency. If you're going to participate in our markets, if you're going to sell securities, you have to be transparent and you have to be honest. And then in trading securities, we can't have unfair practices, manipulation. Those are the SEC's core missions.
And so when somebody files to go public, they file what's called an S-1 document. And some people say you have to put so much information in it that it discourages people from wanting to go public. Is it possible that you could say we don't need all this information, or you think what you're doing now is working?
I think the approach is the right approach, which is give us all the material information about your company when you're going public. That is the right approach. Should we have the same amount of disclosure for our largest companies that we do for those smaller and medium-sized companies? Probably not. I mean, the mega global companies, they need to provide us with much more information than the startup biotech does. And what we're trying to do at the SEC now is say, can we scale our disclosure requirements in a way that makes it more accessible for those medium and small-sized companies?
Now, if you are a publicly traded company, every quarter you file information with the SEC updating investors on developments in the previous quarter. What about just doing it every 6 months as opposed to every quarter? I know that's been debated. You have a view on whether that's a good or bad idea?
Well, markets thirst for information. Investors thirst for information. They want information on a regular basis. I don't expect that quarterly reporting will go away anytime soon. If you borrow money from a bank at the same time as you're selling stock, that bank's going to want quarterly information. I don't know many loan documents that have semi-annual information. But the real question for us is, do you need to do something as extensive every quarter as we require today? Because you know what happens? People take this quarterly report, say the one that would be filed in June, and they compare it to the March quarterly report. And all they really want to know is, what's in the press release, the earnings press release, and what are the changes. And yet we make people file a very large document. So we might be able to do something that's more streamlined on a quarterly basis.
Now, when you were a lawyer, you had very highly compensated associates and partners working with you on behalf of companies. The SEC pays government salaries, which are, let's say, modest, to say the least. I wondered, can you really get good people to stay there because you don't pay them that much?
Yes, we have terrific people. We really do.
Okay, and they can keep up with the private sector bar and things like that are filing information all the time in the investment banks?
I think, you tell me, I think our people have the respect of Wall Street.
Well, they are respected, and if anybody's watching this in the SEC is looking at anything I might be filing, yes, they're very good, they're terrific people, and they do a great job. I just wondered whether they're so undercompensated. I was trying to get them a raise.
Well, you know what? If you can help me get them a raise, okay, let's do it.
Let's suppose I'm sitting in an emergency room of a hospital and somebody wheels in the chairman of the Federal Reserve Board. Can I go and call my broker and say, I think the markets are going to go down because he's a very popular person. Can I trade on that?
Well, it's a great question because that does show the line. Like, where do we draw the fairness line?
Let's go through insider trading for a moment. The Supreme Court has ruled on a couple occasions against the SEC, arguing that you were too tough, I guess, in enforcing the law. Is that a fair reading?
Well, we just won one the other day, which felt pretty good.
Okay, but had you not lost a few in the Supreme Court?
There were a few that we lost.
And the SEC's main argument is that the courts misinterpreted the law when you lose, or how did you?
No, I think, look, insider trading is actually a very delicate enforcement issue, because you could have a rule that said, anytime that you have information that everyone else doesn't, you can't trade. You know, anytime you have material non-public information, you can't trade. Well, that would discourage people from finding out things about companies. And one of the policing mechanisms in our market is private investors going and looking at companies and whether they're telling the truth or not. So we want to encourage that kind of behavior. We want to encourage people to investigate companies.
The theory is that everybody should have access to the same information. So if you're a corporate CEO and you tell me, a private citizen, you're about to buy a company at a big premium, I'm not supposed to take that information and go buy stock because it's unfair to the market.
Correct.
All right. Let's suppose I'm sitting in an emergency room of a hospital, waiting to, just have something looked at by an emergency room person. I'm not really that ill. And somebody wheels in the chairman of the Federal Reserve Board. And the person says, this person's had a fatal heart attack, or potentially fatal heart attack, very serious. And I see the person being wheeled in. Can I go and call my broker and say, I think the markets are going to go down because he's a very popular person. Can I trade on that?
Well, it's a great question, because that does show the line. Like, where do we draw the fairness line? If you're the doctor, we would say you have a duty to keep information about the Fed person confidential, and no one would expect you to trade on information you obtained by being a doctor. But if you happen to be standing there at the emergency room when he or she gets wheeled in, that information you didn't acquire in any nefarious way or any trust or confidence way, and you should be able to trade on that, just like if you saw people loading bricks instead of computers into the back of a truck.
Okay, suppose somebody is a corporate CEO, and they mention to me that he or she is a big company. They're going to pull out of Britain because of Brexit. They're not happy with, and that will have a big deleterious effect on the British economy. Is it okay to take that information and short the pound, because let's say this information would short the pound or make the pound go down? Is that a problem because it's not a security? You can buy and trade dollar bills or pounds. Is that a problem for the SEC if I did that?
We don't police non-securities transactions like that, so a currency transaction would be outside of our jurisdiction.
So you would say, I did that, that's okay?
The answer is, it depends.
Okay. All right.
But you know what? Check with your lawyer.
Okay. What about cryptocurrencies? You've said they are not securities. Is that right? I mean, like Bitcoin.
Well, just because you call something a cryptocurrency doesn't mean it's not a security.
Oh.
We've seen a lot of things that people call a cryptocurrency that are in fact securities. But you referenced one, Bitcoin, which we have looked at and is not a security.
So the average person, explain to the average person, how many members of the SEC are there?
We have 4,600 employees.
Okay, and how many commissioners?
There are 5 commissioners.
And they're all appointed by the President of the United States?
And confirmed by the Senate.
And did you have to be from a certain party or not?
I believe the way the rule reads, you cannot have more than 3 from the same party.
So let's talk about how you came to be the chairman of the SEC. You grew up in Pennsylvania, Hershey, Pennsylvania, initially?
Initially Hershey, Pennsylvania.
And your father worked for Hershey?
My father worked for Hershey. Actually, we were outside of Hershey.
But did you get a lot of chocolate or for free, or?
So much that we got sick of it.
Really?
Yeah.
So you didn't like it that much after a while.
But I like it now.
Okay. So you then initially went to Lafayette College and you played soccer.
Yep.
And then you transferred to University of Pennsylvania.
That's right.
And did you play soccer anymore, or?
A little bit, but only I was a marginal college soccer player.
Okay. And then you graduated summa cum laude, which is pretty good. So then you went to Cambridge, and then you played basketball at Cambridge.
They're shorter.
You came back and you went to University of Pennsylvania Law School. Mm-hmm. and you did very well, near the top of your class. You clerked for a federal judge. And then you went to Sullivan and Cromwell, one of the most successful law firms in the United States. And then all of a sudden you become chairman of the SEC. Were you known to the president? Did you know President Trump?
No. It's actually an interesting story. A client of mine asked me to go to Trump Tower to brief some people on the transition and how our capital markets were functioning and areas for improvement. And one thing led to another, and after a few days, went through some interviews, and then I interviewed with the president.
Okay. Did he have any tough questions, tougher than mine, or?
You're pretty good.
But so I was told he was very impressed with you, and he said, this person looks like he should be the chairman of the SEC. Were you surprised that he offered you the job?
We had a really good discussion.
Okay.
I think you're always surprised when you're offered a job like this.
Okay, so the president proposed that you become the chairman of the SEC. And when you do that, you have to sell all your securities, you have to give up your partnership stake.
Yeah, they didn't tell me all that.
They didn't tell you that? So today, does the Congress bother you on a day-to-day basis? They say, go regulate this or do that? Or
You know what? Every minute I spend up there is valuable, because it is really good to hear from members and senators from both parties what they think we should be doing. It's good to know how someone looks at you when they they're my board of directors.
does the White House or the president, they call you with advice or suggestions, or not that much?
Not so much.
So would you like them to call you more, or not so much?
I like things the way they are.
And when you're relaxing, what are you doing these days?
I played soccer the other day with my kids, and I couldn't walk for the.
Not a golfer.
I was more of a golfer before I took this job.
But if you played now, you would find that people would give you the putts a lot more than you would have thought before. Don't you ever thought about that?
I must be playing with the wrong people.
Okay. Today, when you look at the economy, you're not an economist, but are there any signs you see in the economy that people should be worried about if they're an investor, or you don't really get into whether the economy is weakening and therefore maybe they should be cautious on their investments?
Macro investment advice: steady, long-term investing in America and our economy has proven to be a good thing. I continue to want our markets to be a place where if people invest steadily over time, their retirement will be a much more comfortable one. That's the number one question people ask me, is will I have enough money in retirement? When we go to these roundtables, it's the number one worry on people's mind is, am I going to run out of money? And the best way to deal with that is to steadily invest to the extent you can over time.
So if you were the person who was helping to draft the original SEC legislation, and you could change what you now have, what would you do? Would you change it in some way, have only one commissioner, the chairman, or?
At least for the next period of time.
That would be tempting, okay. But like, for example,
I like my commissioners.
Right, so
it's nice to have
What
them.
would you do to change anything if the structure you're under?
Look, the people who wrote the laws did not expect that we would have markets that were almost entirely electronic trading. Even if you and I make a small stock order, it gets put into an algorithm and is executed electronically. We need to update to take account of developments in technology. But the bedrock principles, transparency and fair trading, those we shouldn't do anything to touch those.
Computerized trading, where you have very fast trading, faster than anything ever anticipated when the SEC was set up. Do you think that's good or bad for the markets?
Whether it's good over time, adding technology to our trading markets has made trading more efficient, and as a retail investor, what you pay to trade today is much less than it was 20 years ago. But we have to recognize that with that comes new risks. And we talked about one of them, which is, if you have a cyber problem, that's a much bigger risk today than if the telephones went out.
How do you pick up insider trading? What do you do without giving away your innermost secrets to kind of catch or figure out whether there's been insider trading?
We do use computer algorithms to analyze trading to see if there's trading that doesn't make sense. And we do catch people.
So from your current position, what do you think is the biggest investment mistake that you think investors make?
I'll give you a couple. They need to diversify, need to keep costs low, and they need to not panic. One of the big mistakes people make is that when they see their investment goes down, they sell, which often that's the best time to buy. But you need a long-term plan, you need to keep your costs down, and you need to stay diversified.
Now, sometimes people at the SEC say that fees that are being charged by investment managers are too high. Is that a general view of yours or the SEC, or you're not that worried about that?
I think that I believe in the power of shopping, and I think that when fees are transparent and people get a chance to shop around, everyone benefits.
Today, as you look at the job you have, are you glad you took the job, and what's the best thing about being chairman of the SEC and serving your country in this way, and what's the worst thing about it, other than an interview like this?
I'm very glad I took the job. I'm very glad I took the job. I believe in our markets. They are the best markets in the world. We need to keep updating them. We need to keep current. We need to keep that competitive advantage for America. And our markets, the participation in our markets is incredible. 50 million households participate in our markets. The best part about it is trying to make a difference for those 50 million households every day.
Now, you have 3 children who are in school now, and they're in New York area where you're from, and so you commute down during the week and you go back on weekends. So on weekends, I assume a lot of your friends are the investment business or the legal business. Do they come up to you and say, you got any good insights I could get from you as the chairman of the SEC, or what do you can't talk to your friends about anything you do anymore?
I used to not talk to my friends about what I did before.
Okay, all right. So you have a lot of friends.
I know, yeah.
Now that you've served in the government for a number of years, do you like it so much that you might consider, I suppose the president called you and said, you've done such a great job, I'd like you to do another job. Would you consider another job, or you're very happy where you are?
I decided to do this job, and I'm really not thinking about what's next. I think I got some good advice from my wife. She said, do the job, don't think about what's next, because then you won't have your mind on the job.
Now, your wife was in the investment business, and when you took this position, she had to get out of that?
She had to, yes. She wasn't forced to, but
you thought it was a good idea to do that?
We thought it was the right thing to do.
And the biggest surprise you've had in the job is what?
How much ground the 4,500 women and men at the SEC cover. I mean, it's $72 trillion a year in transactions. 1 million people in our country work in the securities industry, and they're counting on us to set the rules in the right way and enforce them. And they just cover a lot of ground.
And when you're relaxing, what are you doing these days? Do you play golf? Are you basketball still? Soccer? What do you do?
Well, I played soccer the other day with my kids, and I couldn't walk for the so we're gonna slow down on that.
You're not a golfer.
I was more of a golfer before I took this job.
But if you played now, you would find that people would give you the putts a lot more than you would have thought before. Don't you ever thought about that?
I must be playing with the wrong people.
Okay. Thank you very much for an interesting conversation. Thank you very much, Jay, for doing this.
David, thank you. Really enjoyed it.
Thank you.
Thank you very much.